Hi there, welcome to First Trades right here on ETNOW. Stepping into the new year, we're going to be focusing a lot more on commodity prices. Why? Because they were the worst hit in 2015, especially for a commodity like steel, which is integral for the Indian market. It was one of the worst hit commodities for the year gone by, the year that we are wrapping up. Capacity utilizations on mills fell to about 65–70% odd. Prices collapsed to 2009 levels, nearing 6-year lows, and prices fell more than 50% on an average. So this industry has gone through a fair amount of pain in 2015. Can things change into the coming year over the course of the next 12 months? That's a question that I think we should address, and we will do so with Mr. Ravi Uppal, MD and Group CEO, Jindal Steel and Power, joining us right here, right now. Mr. Uppal, great to have you on the show. We're coming out of a Christmas weekend with the hope, and stepping into the new year with the hope that things may bring some respite, especially for you, with regards to what's been happening with the commodity cycle thus far.
Well, yes, I have the same hope that the new year will bring a new cheer to the industry. The 2015-16 calendar year has been very difficult for the oil as well as the non-oil commodities worldwide. The prices have touched all-time low, but I do think that the next year will bring some cheer. In the last 7 years' time, we have seen two business cycles. We first saw in the start of 2008 there was a market crash, but the recovery was very fast. But this time around, the business cycle, it nosedived and the recovery has been slower. The difference between 2008 and 2015-16 is that at that time the recovery was driven by the Chinese demand. China was growing still at 10–11%, and they had a huge demand for the commodities. But this time around, the Chinese demand doesn't seem to stage a comeback. To the contrary, their own domestic consumption has come down. So that is what has made the recovery a little more difficult. That's number one. And the second is, when it comes to the oil sector, the prices of the shale gas continue to go lower. Last week it was trading at $1.75 per BTMU, and that obviously is creating a crisis for the oil industry. So I think this cycle, recovery is going to be slower, but it's definitely going to be there. I'm personally of the view that commodities in India can recover much faster compared to the global markets. The reason being that our own demand is, propensity is pretty high. That includes, among other items, the steel. And I think that the government and the industry can work together in close cooperation. I'm sure that the days ahead will be good for the recovery of the Indian steel industry.
Convinces you the demand will come back, sir? Because it's been a fairly tough year, and part of the problem lies with slowdown in demand and there being excess capacity. Aside of that, with the significant fall in steel prices, the input costs have also fallen significantly. Iron ore prices have fallen more than 40%. So how do you balance the situation going forward? Because my view would be that yes, there's been this significant fall, but it would take a bit of time before a recovery happens. Perhaps prices would stay at the bottom for a bit.
I think that we have to distinguish between what's the pattern of growth or consumption and who is supplying to that consumption. If you look at the first 6 months of this financial year or 9 months of the calendar year, the demand has risen by 4.5%. But the question is, who was catering to this additional demand? Is it domestic industry or is it through imports? The answer is that a lot of this demand was catered to by import of steel from various countries, especially China, Korea and Japan, which was literally dumping their material into the market. So I think if we can do some kind of ring fencing of the Indian industry against the reckless dumping done by foreign companies, I think the Indian industry can still grow at a decent rate. Now a lot of projects are taken off. Indian Railways, the road sector, the construction sector, all of them have started to grow up a bit. I can see the trend is in making, the kind of inquiry bank which is there. All of them point to the fact that the growth May not be bumper growth, but there will be modest growth even the year 16-17. So we're quite happy that even if the Indian industry can grow at 6 to 7%, and that it will translate into additional demand of 4 to 5 million tons of steel, which I think augurs well for the Indian steel industry. But we got to make sure that we do not have reckless dumping done by the foreign producers, which is precisely what created the crisis. So, the other issue that you mentioned about the dropping price of iron ore, that basically translates into lower cost of steel. So prices have fallen, the cost of production has fallen, both of them. So idea is to make sure that the fall in prices is at least in line with the cost, the cost of production, so that the Indian steel industries are not, making cash losses, or they're able to at least have a reasonable profit to sustain their operations. You got to remember that the Indian steel industry in the last 5 years have put a huge amount of investment to ramp up their capacity. We added something like 30 million tons of capacity in the last 5 years. And how did this capacity come about? Is by, borrowing from the financial institutions. So they are over leveraged right now, and they need time to recover, get their act back together. And therefore, I think they deserve it, because, Indian steel industry is a part of India's steel story. And India is all set to become world's second largest producer. We need to support the industry in achieving that.
Of course. No, I hope that happens. Mr. Uppal, good morning. Neeraj here also joining in. By the way, the commodity market's about to start open, and we'll get you those rates as well. But the idea of trying to get you at this in this series is that we're trying to figure out either the best performers or the worst performers in terms of stock market parlance, and how they could do in 2016. And therefore, my question to you is, assuming that some of the things that you said could happen, safeguarding the interest, so on and so forth, and some of the things that you or people are hoping for do not happen, which is commodity prices moving back to the original heydays. Let's assume the new normal is just about 10-20% above where the current prices are. Do you think the companies will be able to claw their way back into good shape in calendar year 2016?
Most certainly. I think Indian industry in particular can certainly do it. I think the only threat has been that the sizable share of their market has been taken by imports. To just tell you the figures, the imports in the first 6 months of this year grew by 52%. The demand, the domestic demand grew by 4.5%. So anything which resulted in increase of consumption was taken not by domestic producers. The benefit of that has gone to imports. So, America does what is good for America. The Europeans do what is good for them. I think we, as India, why should we not try to protect our industry when the markets are so turbulent? And when some of the countries, like China, which own up nearly 50% of the global capacity, they just want to keep their industry growing, regardless of what happens to a country like India. That we have everything which is required to make steel. Whether it's iron ore, it's coal, limestone, everything that's required. So if the Indian steel industry not helped, mind you that the Indian mining industry, Indian transport industry will also be severely affected. So we have to see in a larger context that shielding our industry at this moment, when the global markets are turbulent, does it serve our national interest? Yes, of course it is. So I think we need to take a very pragmatic view. Indian steel industry per se is extremely competitive in terms of conversion cost. But there are certain other factors which are beyond the industry, which actually make it a case of not level playing field. And I think that is what the government has to take cognizance of and make sure that the Indian industry is able to survive through this crisis and they will stage a comeback in the year 16-17.
Right. Mr. Uppal, we wish you the very best for the coming year, and we hope that the industry sees some ease in pain from what it witnessed in this year that we are wrapping up. Thanks very much for joining us, sir. Really appreciate your views.
Thank you for your good wishes. Thank you.
Okay. I just want to mark the story on JSPL before we go ahead on the commodities market. Actually, let's address the commodities market first, since they've opened trade. Volumes would be thin there too, Ajay?
Good morning, Tanveer. Tanveer, the big story right now in commodities is that globally there is a very big rebound happening as far as metal prices go. But how much of that actually is seen on MCX is something to watch out for. Yes, there will be relatively lower side on the volumes. That's the crude and the natural gas prices for you moving in opposite direction. Even crude oil prices have rebounded just a bit in the last 2 days globally. Metal prices is something to watch out for. Pull up, copper, lead, zinc, and nickel, and we would be getting to know. They have opened